let's bring up the chart software for a kickoff here. I'm going to show you one of the two platforms that I spoke about earlier. This is eTrade Pro. And the reason I brought it up is particularly this has 3 trade ideas scanners going right here. I was once asked during a presentation on introduction to charts, which time frame should I be looking at? And we always answer that question the same way. You need to tell me first what kind of time frame you think you want to trade, and then we can talk about what you should be looking at. There's no single right answer, and that's one of the things that struck me so far in listening to the content, is that there are lots of different approaches that can be used, and there's no one single thing, and that's one of the beauties of the world that we trade in. So we're going to be talking to our panelists here about that, about what kind of approach do they use, and that's kind of what I want to start off with, one at a time. Maybe give me a minute on your style, your strategy, and like what drew you to the markets initially. Brian, you want to kick off?
Yeah, sure. Thank you. My primary time frame that I use at alphatrends.net and for my personal trading is swing trading. So I look at it as a multi-dimensional time frames, meaning that you want to start with a larger time frame to identify what your target stock is that you're trading. And generally speaking, you want to be long in uptrending stock. A real quick, simple way to look at that is what's the direction of the 50-day moving average. So if I have a 50-day moving average advancing, stock is showing higher highs and higher lows, then I'll switch to a more intermediate term time frame. A 65-minute chart, a 30-minute chart, or even 15 for that intermediate. It just depends on how much data I need to see. And on that time frame, that's where I really start to anticipate the trade. So what is my risk reward? Where does the stock come from? Where does it have the potential to go? And I look for a consolidation there with a flat to rising 5-day moving average. And then to participate on the shorter time frame, so could be a 5-minute time frame over the last 5 days, 2 minutes over the last 2 days. So it's multiple time frame alignment is what I'm looking for when we have the preponderance of time frames saying now's the time to go, and I can put my stop in a very low risk place of managing risk.
What do you think is your average holding period?
Not as long as I'd like it to be, truthfully. Recently, we've had some phenomenal follow-through on stocks.
Yeah.
So just over the last month, my time frame has, I'm holding a final third of my position for 2.5, 3, 4 weeks. Generally speaking, over time, it's, I do some day trades. I don't intend to. Right. It's because I got stopped out, or maybe I got impatient, didn't see something. But generally, 2 to 4 days.
Sean, so what drew you to the markets, and give us a thumbnail of your sort of style and approach to markets?
Yeah, of course. I don't want to sound bad when I say this, but what drew me to the markets is money. I wanted to basically get paid. And when I learned about stock trading and learned about all the opportunities there were throughout day trading and throughout swing trading and all the many different options there are about how you can profit in the market, it really just drew me right to it. I started trading when I was a sophomore in college. And as we all know, back in college, we're just trying to live off some ramen noodles. So getting involved with stock trading, it was opening up a whole new world to me, and I was really excited about seeing how far could I push myself and how can I make money, and the best way to make money to be a profitable trader in the stock market. What I really like to do is really day trade, which some people have strong feelings against about, and also people enjoy. To me, it does come down to a predictable level if you're willing to study, if you're willing to put in the necessary work to learn how these markets are going to react. My main style that I really like to look for, though, is what's moving at the start of the day. Every day is something new. That could be from hot press releases that come out. That could be from chart pattern setups that are setting themselves up over the past few weeks. But every day it's a new play for me. Every day there's going to be a new opportunity. So that's my main style.
So as a day trader, do you consciously go flat at the end of each day, or will you hold a position longer if it's working or not?
Yeah, probably about 90% of the time I do. end my day and I don't have to worry about anything.
Right.
You know, when I'm trading and I'm there for work, it's, hey, you know what, let's get it done. But I like to kind of enjoy my nights without being paranoid about some press release dropping or some crazy movement without, you know, losing any sort of sleep. You know, I enjoy just, you know, getting my work done, trading when I can, and then cutting my day out before, you know, 4 o'clock.
And that solves the problem of the stop gap at the open.
Yeah,
you know,
we see
it's always
huge
a
gap ups,
problem.
gap downs,
Yeah,
depending
gap
on, you know, what
downs,
could
and
come.
you've had
Yeah.
stop orders that can really shoot you in the foot.
Exactly.
Jane, I know you talked earlier in your presentation sort of about the things that I've been asking about, but let's do a minute or two on what drew you and how you
for
approach
sure.
the markets.
It was, you know, for me, I'd been a value investor and I wanted to transition into day trading. And for me, it's the ability where I can be done pretty much by 11 o'clock in the morning and I'm done with my day trading. Now, I do also have a 401k and a long-term account. So I still do some value investing. And in my 401k, I will do a little value investing as well as day trading. And as far as really going to the market, what brought me to it was really providing for my family the basic needs, you know, to have food for us, to have a roof over our heads, and to be able to enjoy life to a better extent and to travel more.
So on your value positions,
Yes.
do those end up being really long-term holds? I mean, are you really trying to hold through several earning cycles?
Oh, for sure,
you know?
definitely.
Right.
I actually advised not advised, correction. I alerted people to OLED back in January when it was down at $59, and now it's up at about $130. So that one is definitely more than doubled.
Nice.
And also, you know, like with Tesla, I didn't get into Tesla, but I called the bounce down to the penny. When it drew down and then bounced off. So definitely will look at long-term charts as well, in which case I'm looking at the daily charts for that, as well as resistant and support levels. And then more on my intraday trading, I'm looking at multiple time frames. And I'm looking at 1 minute, 3 minute, 5 minute, 15 minutes, 60 minutes, to go ahead and confirm the trend.
Right. Okay, Doug, you're up. Same kind of thing. Give me a couple minutes on your style, your approach.
All right.
You know?
Well, I got started back in '99, so I guess I'm like the old timer. And it was a means to, back then I was running this motorcycle store. We built these high performance motorcycles, and it was so seasonal that we were starving through the down times of retail. And I was looking for some way to make this spare income, and I had all these customers come in and like, hey, you got to try this day trading thing. People are making bank at it. We're making bank. So that's how I got into it. And at first, they were right. We were doing really well throughout the tech rush, but as most people know in here, that came to an end, and I was not prepared for that. And at that time, I went through 2 accounts trying to figure out how to survive a bear market. And during that time, the motorcycle store just became a casualty. I lost that in the process, lost the 2 accounts, and there I am in my mid-30s with no money, no plan, and I had to figure out some way to get it back. And I'm basically unemployable at this stage in my life. So all I had to do, you know, I kept trying other jobs, but the only thing that kept coming up was trading. It was trading. And all I could remember was after the pain wore off of losing the money, was that I did some good things with my trades, but I made just a couple of really bad mistakes. And I felt if I could correct those mistakes, or at least limit those mistakes, then maybe I could survive. So, you know, step by step, it took me a couple more years after that, but I was able to, you know, claw my way back, become successful, and now I'm going on my 18th year as a trader. So I've done pretty well with it, and I'm pretty happy.
You mentioned the tech wreck. I should have seen the signal when I decided to buy CMGI from a chairlift by calling into my broker and buying CMGI at $80-something and eventually went to 2.
Yeah.
So now I didn't ride it all the way to 2. I wanted to tell you that, but
I
that
probably
was the sign.
did. I probably did. But that's how it worked. You know, once the market started going down, I didn't have a plan. I didn't know anything about
Right.
short selling, hedging your positions. I just turned to the only resources I know, which I think it was Greg brought that up, was about CNBC and the Wall Street Journal. And the consensus at that time was BTFD, just, you know, buy with both hands. This is what Warren Buffett does. So I was like, if Warren does it, Doug should do it. And I just started going in there with both hands. And, you know, within months, it was like, well, I don't know how Warren made it work. I didn't, you know. I'm like destitute, but, you know.
That's funny. Let's get more pedestrian here. A lot of home traders here, part of this audience. Tell me what your trading morning is like. How much before the market open do you start looking at things? What do you look at? And what's your physical setup like? What are you sitting in front of during the trading day? Let's go same order. Brian?
Okay. I have 4 monitors in front of me. I have a television that's usually muted with a financial channel. And then I have a laptop with some other information on it, such as trade ideas, which I'm starting to integrate more into my trading routine. But my day actually begins the night before when I'm going through manually looking at generally about 100, 150 stocks that I have kind of targeted for a week or so. And then I'll look each evening for setups the next day for swing trades, realizing that some of them will trigger, some of them won't. I have my A list, my B list, the real focus stocks. So, I try not to get to my desk too early, intentionally. So the market opens at 7:30 in Colorado. I'm generally sitting down at 6:45. I do that intentionally so I am not influenced by news reports and that sort of thing. By employment reports. I'm really not interested in what happened overnight because I'm not going to stay up all night trying to hedge and that sort of thing. So position size management becomes really important for deciding what you hold overnight. So I'll sit down, review the stocks that I have open, try to see if there's unusual volume or anything strange happening I should be aware of. Set my alerts so if I think a stock is a buy above $50.50, I'll set an alert at $50.45. So I know now I have to, pay attention to this, watch, because if it breaks out, I want to be there. So it's, waiting for things to settle down a little bit and then entering trades. Sometimes, it depends upon the day and the conditions of the market. Sometimes I'll get in right away, but if I do, it's generally smaller share size. So it's kind of listening to the messages of the market and trying to assimilate what's relevant for that day. And then, just kind of managing the positions and
How many positions do you have open at any given time, do you suppose?
generally no more than 4 or 5. So it's pretty concentrated, but when a stock runs real quickly, I'll take a third off, almost immediately if I get that real nice quick move, just to, not because I'm looking to make a very small amount, 30 cents or something, but because that will allow me to hold the rest with less risk. And again, it's all risk management. If it comes back and stops me out at my break-even price, then I still make money because that initial third. And then just kind of listening to the message of the market, letting it speak to me rather than putting my thoughts there. And that's something that Holly does a great job of, saying there were 8 long setups today that fired. You're not saying, hey, I just want to trade long today. The AI is programmed the way a good trading brain is, which is I want to listen to the message of the market.
Yeah, I mean, that's the theme of this discussion. I think you captured that really well. Letting it come to you and not trying to force it. Sean, what's your setup like? Give us a picture of what you're sitting at in front of you.
Yeah, well, if I give you that full picture, it's 3 monitors and a bowl of Wheaties right in front of me every morning. Basically, we're going to have 3 monitors right in front of me, and on my left monitor, I have my E-Trade setup, where I'm going to be placing my orders. In front of me, I have my trade idea scanners, and on my right monitor, I have my chat room, Deckmar Trades. Basically, I wake up at 7:30 a.m. I'm by the computer. 7:30, 8 o'clock, 8:30, 9 o'clock, this is when press release waves are going to come out, when companies are going to release press releases open to the public, and that's when us as day traders are going to be able to buy in pre-market and be able to try to get in before the overall market opens, and we can hopefully get some sort of these gap ups where we can make profit before the day even opens. So personally, what I like to do as a trader is be awake during these times. So right when a press release drops, if I see it a minute after it opens up, says positive phase 3 data, I'm going to look at that chart. If I like it, I'm going to hop in before the market even opens. I could end my day before the stock market even opens. So I really enjoy waking up early. For me, the best time to trade is that morning time. That could be either from 9:30 up to around 11, or it could be even in pre-market where I've had some of my biggest gains from finding hot press releases the moment they drop, and then being able to buy in during pre-market, getting those big time rips, getting those big time gap ups, and profiting before the day even starts.
Interesting. Yeah. So do you ever close out a trade at half hour into the market and then go play golf?
Yeah, I mean, golf's a great sport. A lot of times, yeah, I have done that before where I'll see an 8 o'clock press release comes out, could say we have been seeing significant improvement in our drug testing. The stock rips, let's say $1.50. I'll have 5,000 shares, make a few $100s to a few $1,000s, and wrap my day up and go out and enjoy.
Great, cool. Jane, tell us your trading day.
For me, well, you guys saw my setup earlier. I do have 3 monitors and 2 laptops in case one were to go down, which I've had happen, as well as the internet. But for me, I really try to sit down at my desk around 8:45. It's getting the 2 girls off to daycare, and I'd like to be there earlier, but honestly, that's what time it usually happens. And then I'm setting up my watch list for the day, going ahead and putting in my resistance and support levels and watching the stocks to see how they are in pre-market, to see if that trend is going to continue or is it going to drop off as well, like a phase 3 or something like that, or phase 2, where a lot of times you'll see it spike and then right it open, it'll be a short opportunity. So I definitely do it beforehand. Just simply time management for the day. That's it.
Right.
You know, I've got my daughters to take care of. I'm a full-time mom first and then part-time trader, and usually done by about 11.
That's actually a nice ability to basically deal with your family and then get into the markets and trade and not have to go punch a clock somewhere, even though I don't think we punch clocks anymore anyway. But Doug, what's your trading setup like?
Well, you probably would figure it out. I'm pretty primitive. So my setup is as well. I just have one chart, 2 screens, and I have a projection screen. Actually, it looks something like that. Helps me see it a little bit better, or at least I think it does. Most of the trade ideas that I get will come from stuff that you were working on the previous day that might not have lined up. And then there's a handful of stuff that just happens to be there when the market opens. I'm mainly a reversal trader. I like to short parabolics and stuff like that. And for those that don't know what that is, you're looking for things that are not what I consider not a trend. It's a euphoria trade, to where a stock goes extremely vertical, way outside of its normal daily range. So I kind of look for maybe news events or something that's centered around that could get that stock to do that. And then once it starts going vertical, or sometimes I'll use a trade idea scanner as well to find stocks that are thrusting up 2 to 3 minutes quickly. I'll look for some support or resistance levels. Resistance if you're shorting, support if you're trying to buy. And then just try to go into it with starter positions and feeler positions and work my way through it. But I don't use any indicators but support and resistance for entry points.
Interesting. So earlier we said that 1/3 of traders traded on Trump tweets, and not one of you mentioned Twitter or social media. Do you pay attention to Twitter? Does it ever spawn a trade for you? Quick answer on this. We don't have to go.
I look at it, I kind of have it running, but I don't pay a lot of attention to it. Sometimes, what I failed to mention is actually on stock twits, I'll look at kind of what are the hot stocks and just kind of look to see what's happening. And if I'm bored later in the day, I'll kind of gravitate towards those trades. I've got you beat, by the way, 1991. I'm kind of the old timer here. And, you know, the day trading thing is something that I've gravitated away towards. And I think it happens as you get more experienced and more time. And that's not a criticism of it at all, believe me. But, you know, your reaction time slows down, or you just don't feel like the fight every day. So I've progressed or transitioned to the longer term time frame, which is still a pretty short term time frame for, I think, for the majority of market participants in general. But no, I've never traded on a Trump tweet. I don't think I will. It would take something highly unusual.
Sean, do you engage with social media during the trading day?
Yeah, a lot, all the time. I definitely follow stock twits and Twitter because, you know, especially these little penny stocks or anything that I trade between 25 cents and $25, they're easily manipulated. Right. So if we have a lot of people and a lot of volume moving into one stock, it's going to be ripping on up. So it's definitely very important to follow all social media accounts and see what stock twits or Twitter or Facebook or any of them are talking about, because if there's a lot of attention, a lot of talk going about this play, a lot of people are going to get emotionally attached to it. They're going to think something's good, and they're going to be pushing that on up. I don't follow Trump, though, on Twitter. That's all.
Do you follow the Twitter sphere, the financial Twitter sphere?
I don't really follow Trump's tweets as far as trading, and I share on Twitter, but I don't really follow the stocks that much on Twitter. I would say it's more my alerts that are going off with trade ideas that I'm listening to, and then if I hear the audible alert, then I'll go and I'll check the stocks, see the chart, and then I might go and do a search to see what they're talking about, if people are into it or not, what their anticipation of the move will be, but I don't use it as a prime indicator of getting in or out of a stock.
Doug, I guess I'm going to just jump to the conclusion and say you probably don't, but actually in looking for stocks going parabolic, it might be a helpful tool. Do you use Twitter in that search at all?
Yeah, sometimes, kind of like him, when I get bored, you start, you feel like, hey, there's got to be something going on in this market, I better look. But I found that like most news events that it's more of a distraction because at some point you're going to do this research on a stock and you're going to say, this is the greatest opportunity I've ever seen in my life. And you're sold on that. And you hit the button and then you go on Twitter and there's somebody that you respect and follow that says, your stock sucks. And there you go. You're like, oh, well, maybe it does suck. Maybe I missed something. And you start talking yourself out of it. And then the next thing you know, you get out of the position and maybe you were right. And then you're angry. And it's like this spiral downhill that's real bad.
Right.
So CNBC and the Wall Street Journal killed me in the early 2000s. Twitter has tried its best over the last 5 years to demoralize me, but I'm still here.
That's
So,
funny. By the way, if you're not aware of some of the functionality and trade ideas, there is a scan in there where you can look for high stock twits, higher than average stock twits mentioned. And so that's a shortcut to those kinds of things. Just real quick to show the screen up here. I mentioned that I've got 3 panels going there, the blue one, the yellow one, and the green one. They're color-coded for a reason. Those are some of the simplest screens you could ever think of, and I prize simplicity. All those are stocks crossing the 20-day moving average in blue, stocks crossing the 50-day in yellow, and stocks crossing the 200-day in green. The reason they're colored is those are the colors of my moving averages on my charts. So if I was to look at my daily chart, you'll see I've got 4 moving averages. The blue one is the 20-day, the yellow one is the 50-day, and the green one's the 200-day. So it's just a way to sort of make the interface more digestible for me. And I think the flexibility of what pro and trade ideas can bring you is really a very powerful combination in everything we've been talking about here. Let me go back to the word simplicity. Every one of you has described a very simple approach to the markets, a very simple set of things that you're using. And so often in our retail world, I see someone who wants to put 17 indicators stacked on top of a chart. And I'm heartened by the fact that professionals migrate to simplicity, not to complexity. And that's, I think, one of the hallmarks of what Strategy Scanner can do, too. It can focus in on specific things that are happening at the time. Let's get now into the current environment. You've all discussed a little bit of a different approach and focus. What are you seeing now? What themes are you seeing? Do you want to bring up any stocks for us to look at? Let's start with Doug this time and come back this way.
All right. I'm thinking of that slide earlier when they had the movies. I'm thinking Jackass for the market, and sometimes dazed and confused. Not that that's a bad thing that you can't make money with, but when you've traded so long, over 18 years, when you rank markets and market times that you've traded, this is one of my least favorite, and I think so because of the volatility. I can't remember the exact statistic, but sometime during the course of this year, I think we went 30 or 40 days without a 1% intraday move in the index. And if you're a day trader, I mean, if you're like a swing trader, you got a 401k investment, the market's great. You just look at it and it's floating up. It's all cute and stuff. But if you're really trying to capture that alpha as a day trader, that's what you need is volatility. I mean, the biggest days that I had last year was Brexit, the day after breakfast. I need some breakfast. That too.
Lunch is coming up.
Brexit, and then, of course, the election. No surprise that the 2 most volatile days of the year. That's what I thrive on. And I think day traders, when they're trying to capture alpha, that's what we want. What you're getting now versus what you had in the past is that you have so little of those opportunities. Like before, you could miss 2 or 3 of your opportunities, and there'd be another one following right through the back door, just real quick. Here, if you miss an opportunity now, it's almost like after the first 30 minutes to 1 hour of the day, it's just like this.
Yeah.
So if you've kind of screwed up on your entry or execution, or you botched a trade, or you missed something, the pressure is on because you're most likely going to have to wait till the following day. Now, that's not always the case, but that's definitely what I see right now is this flat line, low volume market. For whatever reason, I have no idea, but that's where it is.
Jane, seeing anything interesting thematic-wise out there?
Well, I agree with Doug in that, even on CNBC, they're saying the volatility of the market now, it's been the lowest September for volatility in the past 25 years. However, I disagree with Doug in a sense that with trade ideas, you're always finding opportunities. I mean, to me, I'm always finding something because my alerts are going off, and I'm able to find the volume and the momentum behind a stock that's moving. It's not necessarily the big cap stocks that you need to, in my opinion, follow. But I'm always able to find something, and maybe that's coming from the day trading, intraday trading mindset.
Right. Sean?
Yeah, definitely on the day trading aspect, I've personally been, again, don't mean to disagree with anyone, seeing a pretty hot market, at least in the stocks that I've been looking at. Like some stocks, if you want to look them up, HMNY, ITUS, IZEA, these three have all been breakout super, and they've been insane these past few days or past few weeks, where they have been going on absolute huge parabolic moves. And you can, if you are seeing these and you guys can predict these, you can literally change your life. So these have been some very hot stocks, and usually between October all the way until January for day traders is a very hot time. So seeing this kind of kick that off, I'm definitely pretty excited.
Might be one you want to look at shorting here for your parabolic move. Brian, what are you seeing in the market these days?
I see those stocks, and I get involved in them a little bit here and there as well. They're kind of, I see a lot of complacency in the market because we've had no volatility. And, the short, the volatility trade has been maybe too popular.
Right.
And the BTFD, which if you don't know, buy the F and dip crowd, is kind of, you can't win every single time doing that. So far you can, but when it doesn't work anymore, then there's real problems. These little stocks that are moving like this, they're fun, they're great while they're there, and they can be traded in both directions. But I think it's showing a little bit of sign of froth, that maybe the overall market is getting a little bit ahead of itself. You look at some of the moves, someone mentioned McDonald's before, the stock's nearly doubled. Boeing, big stocks that are just going on these tears like you wouldn't, but Navistar has gone from 30 to 45 in the last 2 months. It's a trucking company. I don't understand why, other than there's just so much money chasing these now. And I think that a lot of people are not familiar with how to short. And
Right.
there is a day of reckoning coming. I'm not a doomsayer. I'm not looking for it. I trade the trend. The trend is higher. I know it's going to not last forever. So, and shorting is, in the traditional short setups, they just aren't sticking the way the longs are. So it's a fertile environment. There's a lot of opportunity out there, but look out.
So, so many retail investors who don't use a product like Trade Ideas trade the same old stocks all the time. The FANGs, for example, or if you were to look at the most active list at TD Ameritrade and the most active list at E-Trade, it would almost be the same stocks. One thing that, I also do with E-Trade Pro here is this is a page showing some stocks that I've got on a watch list. And they're here simply because they came up on a screen and I've simply added them. And what I do, if you'll notice, I add a note that describes what I was seeing at the time, so that as I revisit that chart later on, I can see what I was thinking, and it helps me clarify what went wrong, particularly with the trade. Also, if you'll notice, our charts have drawing that retains the drawing. So here is when this one particular stock, what is this? Nucor, that's my top one. So this is when it first alerted to me, and it was these moving averages crossing each other. But that kind of idea of using a journal and following what's happening now, not the same stocks, it frees you. When you're just in the same stocks everybody is, you're in this lockstep sync with everybody. When you're on your own stocks, you have a much freer approach to it. I want to do sort of, let's call it the lightning round. Wow, that would be ripping off Jim Cramer. I want 1 or 2 words reaction on a few different things. So the first one is, what do you see happening in the next 6 months in the market? And I don't want a big discussion. I want 1 or 2 words that gives us the flavor of what you think. Something corny or stupid or really deeply insightful. One of those.
Only price pays, follow price action, no matter which direction.
Perfect.
Hot sauce. It's gonna get spicy.
Yeah, I think surprises.
Surprises.
I don't know.
A healthy attitude, that's kind of the trader's mantra, right? That's kind of what we're saying here. So we know there's going to be a pullback, right? It always happens. We've probably been hoping for it for some time. Something's going to be the catalyst. Is it going to be a black swan type event, and that's Nicholas Taleb, who wrote about black swan events, which are, I don't know, 5 standard deviations away from the mean type thing. But what do you suppose, what thing might be that catalyst event to move the market lower? You got an idea?
No clue.
Yeah, I mean, it's super unpredictable about what would make the overall markets drop. I mean, you have to think about what's kind of going on in the world today. Obviously, if there was ever something with another war, that would obviously have a huge effect. The natural disasters that have been going on, even though the markets have been able to hold pretty steady during those. So, we'll definitely see. Well, only time can tell.
I think when big money investing starts changing direction.
Yeah, the big flows.
Again, I don't have any idea whatsoever. I mean, there's been a lot of stuff thrown at it up to this point. You have had threat of nuclear war. You had, like we said, Brexit before, this administration and stuff like that was supposed to be big bearish events that didn't turn out to be like that. So it's probably going to be something that nobody expects and is quite stupid. But who knows? Who knows at this point? Because as I said, there has been things that should have sold it off and was able to hold it down, but it hasn't done that yet.
I like to circle back to what Brian started with, price pays. A friend of mine was skeptical about the stock market for years after 2009 and wouldn't get invested, and all he did was cite every economic malady that was going on. And he said, it's going to crash, it's going to crash. I said, well, I'll know when it does, and price will tell me, and I'll get out then. And I don't have to fret about it. And so I think you basically have all reflected that same notion. I think we're coming up toward lunch now. Should we have some audience questions? Do you want to let the audience ask questions? Sure, let's go right here.
Quick question. What do you guys think about if you have the technical indicators that you like to rely on, are there any, such as Fibonacci and things like that?
Yeah, my 3 go-to indicators are the 200-day moving average, the 50-day moving average, and the 13 EMA. Now, why do I like to use those? Because they are the most popular. So 50-day moving average and 200-day moving average, any stock site you go to, stockcharts.com, you go to finviz.com, you go to tradingview.com, these are going to be the ones that automatically pop up. And most of the time, they're going to be popping up on a 6-month time frame chart. So that means traders are going to be looking at these immediately, and psychological play, they're going to say, when this breaks this, we could see a nice move. If we come up to it and start falling to it, it's going to be holding as resistance. If we come down and bounce off it, it's going to be holding as support. So those are the moving averages I like to use because they are the most used. I'm not going to be picking out a 17 moving average on a 3-minute time frame. No one's going to do that other than you. You'd be like, why is this not bouncing? Because you're the only person in the world using it. So you want to use what the majority is using, because the majority is going to have the most power, the most play. So that's what I like to focus on.
By the way, price pays, the moving average is price. So it's, that is it, essentially. Were you all going to reflect on that? Yeah.
I'd like to talk about the volume-weighted average price, the anchored volume-weighted average price. To me, that's the perfect combination of the 3 most important things, which are price, time, and volume. We can really get, that anchored confirmation bias. We heard about the other bias that I forgot. But anyways, the anchor confirmation bias someone was talking about earlier. The anchor bias, if you just think about since an event, since the Fed, since the elections, since an earnings report, since an IPO, the volume-weighted average price, I would encourage everyone to take a very strong look at. It's something I talk about all the time, and there's some great tools based around the volume-weighted average price in trade ideas as well for day trades specific. So without a doubt, volume-weighted average price.
Well, as I said before, I don't really use any indicators like that. Just support resistance on the entry. On an exit, I'll try to use the VWAP or the 10 moving average as a target. That's what I'll use as a target. But other than that, I don't.
Candlesticks?
Yes, just regular candlesticks, support and resistance. I'm not saying that's like the way to do it, but that's the drum I've been marching to for a long time. It more comes from feel of being in the market so long and trading so much. You just kind of anticipate what's going to happen next and how stocks move. That's why you need that screen time, especially for struggling traders, new traders. That's what you're after more than anything, is the screen time. So you can just get a feel of how the market operates and the cycles that it goes through. And that's what ultimately makes you successful.
I'd say for entry, it's mostly candlesticks. And then for exit, I would be looking at RSI for a higher momentum stock once it's going outside of that RSI, the upper limits, Bollinger Bands. Once it's going outside of the Bollinger Bands as well as the super high RSI, then you're going to see it snap back and you're going to see it pull back. So go ahead and try to get an exit right up there while it's still in the buying motion instead
So
of
a
the
candle
pullback.
pattern for entry, and then a couple technical indicators to tell you
Yeah.
that the stock's overbought and is likely to pull back.
Correct. Or the other direction too for shorts.
I'm curious, and maybe there's some more questions on that, but I want to ask this too. We talked about it briefly, about the idea of stops. We know that many retail investors don't know that stocks can gap at the open, and that can trigger a stop, and you can get a very nasty surprise. Each of you, do you use stops, or do you use mental stops, or do you use alerts to prompt you to exit?
Well, again, I'll go back to the feel thing. I just use a mental stop, and I kind of balance that out with position size. To me, that's one of the most important things about trading is having the right kind of position size based on the stock that you're trading and the range that it may deliver.
Right.
And getting yourself into a comfortable situation, allowing yourself to have some wiggle room, I think you'll have a lot more success working trades rather than just getting stopped out by some of these algorithms or wild moves the market sometimes has.
Yeah. Do you use stops or alerts or mental?
Just mental stops. Just mental stops. That's it.
I'd say the hardest part of a trade is obviously right when you get in. If it's not going to go in your direction, then go ahead and exit. So right initially, I'm not going to put a stop in because I've noticed obviously the brokers send it to the market makers and then it goes ahead and executes. So immediately, if it's not going in my direction with the mental stop, I'll go ahead and execute it. However, if it starts moving in that direction with the little one and she's home, I will try to go ahead and put a trailing stop in because I will keep it green and I'll put a further exit point that I would like. But if I have to step away, I'm going to protect myself.
Right. Sean, do you use stops?
Yeah, I use mental stops now, but starting off, everyone should definitely use a stop loss, no matter who you are or what your experience level. Some sort of stop loss. When you're a rookie or a beginner, definitely have a set stop loss that your broker would be able to get you out. A trailing stop is excellent as well because you're always leaving with profit as long as that stock's moving up. Right. And it really just comes down to discipline. If you have discipline, you can use a mental stop. But if you can't be a disciplined trader, that's when I suggest you type it in and let the program do the work for you.
There's always open orders are called good till cancel in our world, and there was always people would put stops in. This was back in the days when we took paper tickets, but people would put a stop in, and there was one particular customer who we kind of chuckled at because his orders were basically good till close. So in other words, as soon as it got close, he was like, "No, I'm not going to get out. I'll cancel that," and then he would end up riding a loser all the way down. So. That idea, everyone here has echoed this, risk management and exiting a losing position, it might be the single most important thing to long-term success. Do you actually use stops or mental stops or alerts? Or
Well, I think that, in stops for swing trades, it's important really not to set your stop before the market opens. That's one thing I would tell people as general advice. Yeah. A lot of times, and look at the personality of the stock. If it has a habit of maybe dropping a little bit on the open and immediately snapping back, wait for it to play out. Wait for it to get back above its VWAP, create a higher low. So I will use mental stops unless I have a lot of positions on and there's one I'm worried about, or if I'm not able to look at them very closely, front and center, all of them, or if I move away from the machine, I'll put a stop in just to be safe. But generally I don't set physical stops. It's mental because I'm sitting there.
What about, quick answer, do you use mobile for backup or added information or executing trades ever? Do you use a mobile app?
I do, yeah.
Yeah. Do you use mobile?
No, personally, I do not.
Do you use mobile?
For following stock, yes.
Mm-hmm. Use your mobile?
I'm still struggling with text messages. No.
You're playing your character perfectly here. Some more questions. Yes, sir.
What's your best advice for managing your emotions around going on till? What are your best tips around psychology?
Yeah, I'm actually going to be speaking about psychology when I'm coming up, but really when it comes down to discipline, the best lessons are usually from your losses. So through that, it's going to be a lot of experience. I've been trading now for the last 4 years. how I became a disciplined trader is a lot of the time because when I first started, I didn't do the things I was supposed to. I was making really bad mistakes, and from those mistakes, I said, "Whoa, I just lost $400. I don't want that to happen again. I'm going to make sure that doesn't. I don't do that mistake. If that was holding the bag, or if that was not setting a stop loss, or if that was being too greedy, when it comes down to being emotionalist and having discipline, a lot of that's just going to come with time, and that's something that you have to understand. And you can paper trade until you start building a little bit more discipline in the market. But a lot of it, I like to call is just learning off your losses and not having a loss turn into a failure. A loss is a lesson to be learned. So it's really going to come with time.
You have to know thyself when it comes to emotions because all of us are different. We have all different emotional triggers. I mean, I'm high strung, so emotions were very difficult for me to start with. I struggled with that for a good 3 to 4 years. I mean, I just felt as if I got into a stock, it had to work right away. If it was 30 seconds later and I'm down $10, I'm smashing windows. It was bad. And so everybody's different. You got to find that emotional trigger, deal with your own demons that you have. But the easiest advice, as I said earlier, is through position size. You got your ability and your anxiety here, but a lot of traders are tagging position sizes up here. You got to get them down to where they're even or maybe a little lower, especially in the beginning, just so you can feel this market out, so you can breathe, because the biggest thing that leads you to being stopped out on a winning trade is you were too heavy in the first place. And you got scared. You were looking at the P&L versus the chart, and that's what happens. You allow the money to distort your perception of why you got in the trade, and then it just starts going downhill after that, and you're on this endless cycle.
I'd say journal your trades, the entries, the exits, and the emotions behind the entry and the exit, and what you learned from the trade, whether it was a positive or a negative, what happened in that trade. So you can go back and review it at the end of the week and see, so you can progress every week.
I think that's very good advice, definitely. Over there on the aisle.
I want to take you guys in a little bit of a different direction. We all know that trading is both a mentally and a physically exhausting process. The nuts and bolts of how you guys tackle your day is fascinating. But I would like to know, how do you guys work at keeping yourselves mentally and physically in top mental shape, either during the middle of the trading day or outside of market hours? Do you guys have any unique routines you'd be willing to share?
Well, I'd say for me, I just had a baby 8 months ago and it's all gone. So I definitely go to the gym, and a healthy diet, healthy exercise routine, and sleep. You have to have your rest to be able to have a functioning mind, and water and snacks, proper nutrition before the trading day.
I think Jane hit a great point. Sleep is really important. Trading sleep deprived is like texting and driving or driving drunk. It's just a bad recipe. And, healthy lifestyle, yoga, weights, we'll go to the gym, just keep your body active and your mind.
Yeah, simple as that. Just stay, healthy. It doesn't have to be something insane, but, definitely how you feel, you're going to be a lot more confident. So if you're going to the gym and you're confident in yourself, you're going to be more confident in your trading.
And the discipline in your life outside of trading overflows into trading.
Just to answer that, I operate like in spurts because that's all the energy I have. And I know that my strategy is really good from like market open to the first hour. So I try to put 100% of my energy and my focus into that. And then after that, I sort of just back off, take a few hours, maybe, do something. And then come back a little bit later and try to reassess where I'm at or what might happen late in the day. But I've been in that position where you're trying to go full bore all 6-7 hours of the day, and you do that every day, or you even studying. If you just study too much, you work too much, you force things, that's when bad stuff starts to happen.
Great stuff. Look, we're up against the break, so let's have an applause for our panelists here. Nice discussion.